I'm not locked in here with you. You're locked in here with me.
Hello, everyone, and welcome to another edition of Real Estate Realities with me, the Rebel Broker, licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. With over 30 years of experience, I come to you with gifts of knowledge. Or at least I hope. Hey, everyone. One thing I'd like to say right off the bat is, every once in a while, I get some interesting people who reach out to me. I have had people just dial me up out of the blue, and I want to have very interesting conversations that have run the gamut from completely off the hook insane to just awesome. And, it's always amazing to me, a lot of times we focus on the negative things that come our way. But boy, the show I put out on Monday, I got some great responses. I had a great a post on the YouTube presentation of that particular podcast. More of a personal thing. Thanks for that. Had a couple of emails that I got from folks. You're just great people. And I want to thank you for it. It was super supportive. And what was weird, it was because this isn't that, right? This is a real estate show. But the kind of emotional / motivational support that kind of came out of the woodwork really blew me away. So thank you for that. I appreciate it. Apparently, I must have sounded, I don't know, I guess a little bit more needy than I realized in the last show. And maybe it's true. It's hard. I think it's hard for us often to self-analyze, particularly when we're dealing with things that scare us or concern us or things that we doubt about ourselves. And we try to maybe frame a different perspective or story about that in our head so that we don't have to actually face that these things annoy us. But anyway, so as I said, I am not Mr. Motivational Speaker guy. I'm just a guy who maybe thinks a little too hard about things or spends a lot of time dwelling on things. And apparently I'm not alone. At least I know that. I guess there's comfort in being in a group of some kind. But today we will turn the corner, my friends. It will no longer be a very special episode of the Rebel Broker exploring his inner self. It will be actual real estate. I realized we did some actual real estate last time, but I also realized we spent about half the time with me kind of whinging. So I'm going to stop doing that. My whinging will be all real estate related today. I promise. Starting now, because I realize in the first chunk of right now, it's been more whinging in the last 3 minutes and 30 seconds. So, all right. So, I'm always interested in the tidbits, the little pieces of data that come our way. Something interesting that I came across, and who was the source? I always like to make sure I tell you the source. This was CNBC reporting it, which they clearly got from someone else. I'm not sure I see where the heck it comes from. It probably comes from the National Builders Association. That's usually where this number comes from, but I want to make sure it's not some sort of bizarre, like Bubba's. Yeah, it's from the National Association of Homebuilders. So it's a when it comes to this kind of data, I'm willing to take what they have to say. Builder confidence hit in the newly built single-family home market jumped 5 points in December to 76. That's the highest reading since June of 1999. Now, before we get excited about that number, let's think for a second. Because if you've been a long-time listener to the show, you know that we've talked about the evolution of the market and how we got up to the downturn, which I will argue has its first seeds in 1972, and then a full-on sprout in 1994, and then right around 1998, 99 is when it really got revving, right? In terms of creating the circumstances that really built up the stupidity that led to the downturn, okay? I'm sure that show is still out there. If you want to Google it on the site, you can head over to therebelbroker.com if you want to see if you can track it down there. I'm sure it's still there. Okay, so why is there a disconnect? There's a logic disconnect between these two things. If we take this number at face value, and see that we are building with it, that the confidence is now is at the level it was in June 1999, we should see a huge uptick in the amount of new home building. But I don't see any of the indicators that present that. And this is another thing we've talked about before, confidence numbers, right? I've always been a little suspicious of confidence numbers. Demonstrations of confidence come through actions, not somebody asking you, how do you feel about things? Do you feel good? Do you feel confident? If I'm confident that a horse is going to win a race, I bet on that horse, right? So that would be reflected in an easily trackable stat of the amount of money bet on a specific horse, right? For me, confidence is when someone makes a decision, invests time, money, equity, whatever, into that confidence. So we'll have to see. In 1999, we weren't there yet. We weren't. If for those of you who haven't really seen this chart, it is the ultimate. What do you call those? Hockey stick graph where the number just jumps. That led up to the 2006 through 8 downturn. Now that historic growth started in 1990, right? So we had a economic downturn right around 1990. That was the savings and loan thing, right? I was in real estate at the time. Literally over the course of a weekend, properties went from sitting on the market forever to suddenly being sold. Depressingly, I was only a couple of years out of college at the time, but I'd been a real estate agent since my senior year of college. And I had my eye on a few properties, and as soon as they hit a certain number, they were going down by like $10,000 a month in asking price. And I was going to go in there as soon as they got within striking distance, and I was going to make some offers. And then this one weekend, they all ended up selling for above asking price. Why? Because interest rates dropped below 10%. They went from 10 to like 9.8, and everybody went nuts because they thought, wow, we'll never see interest rates like this again. Funny how things change, right? In a relatively short period of time. Now, I have found a graph of new home construction. And I want you to sort of, I'll go ahead and put a shot of it in the show notes for today's show if you want to see it. And I'll also include a link to where it lives. Super interesting. All right. In gray, it shows the recessions, 1990, 2000 and whatever. I don't know, 1 or 2, 2001, I think was when the dot-com thing happened. And then the 2007, 2008, which arguably actually happened in 2006. And you can see the change in new home construction. So it jumps up. It peaks out at 2,273, whatever. I'm sure that's million. That's probably 2,273,000 in January of 2006, and then starts its precipitous decline right through to 2009, where it bottoms out in April of 2009 at 478,000, I'm guessing is the scale. And then really pathetically increases to where it's at now, which is November of 2019 is 1,365, or probably 1,365, which if you look at that plotted, that would be going back to about 1997. So 1997 construction levels is kind of where we're at. If this and so 1999 was just obviously a couple of years later, and after 1999 we saw there was a flattening sort of right from 1999 through to 2000, where we kind of had that mini .com bust, which frankly didn't really do anything to home prices. It's really in terms of construction. And then it just goes crazy and jumps up to its peak. So is this a sign, if we are able to extrude any kind of assumptions about what's going to happen, right, based on what someone says their confidence level is, then this is an interesting number. My argument would be no. My argument would be, let's look for the other things that feed that confidence. And what are those things that help someone like us, an investor who's trying to anticipate things rather than follow things, right? It would be the very first things that happen when new construction happens. What's the very first thing? Architecture, right? You start to see architectural folks showing greater demand. And that's actually another number that tends to come out on a regular basis. The acquisition of large parcels of land, the filing of plans, right, for construction. And those are all numbers we get to see. So if that's true, if the confidence level is anything that we can rely on, we should start looking for those signs that people are acting on that confidence. So interesting numbers to hear. Current sales conditions rose 7 points to 84. Sales expectations in the next 6 months rose 1 point to 79. And buyer traffic increased 4 points to 58. Regionally, on a 3-month moving average, builder sentiment in the Northeast fell 2 points to 61. So take this into account as we're thinking about this. Think about markets you're thinking about buying in, so this is the builder sentiment thing, right? And so look for signs of this in your local market. So falling in the Northeast 2 points to 61, increased 5 points in the Midwest to 63, 1 point higher in the South to 76, and increased 3 points in the West to 84. So in my neck of the woods, it's at 84. So the top end of the curve on the national average. If that is true, I want to see a ton of new construction starting up. Now, we're right at the time of year when architects would be getting consulted, land would be getting acquired, or maybe just land that was acquired that was never acted on, start seeing some action, maybe some grading. Out here in California, we don't suffer from a lot of the problems that you do in the Midwest and the East in terms of frozen ground and really crazy weather that prevents us from doing anything. Oftentimes, you'll find some of the prep work can be done here that it couldn't be done there, or it just is impractical to do for whatever kind of reason, right? So sometimes you'll find that grading will be happening now in preparation for building to try to make it in time so that you can start selling in June, July timeframe. So we'll see what happens there. And if I start to see a bunch and now there has been pretty good construction here in Morgan Hill. There's been a few places going up and a few that were pricing them below average. They were all townhomes, though. None of them were single-family residentials. So, use this data to sort of feed your exploration of markets you're interested in or your local market. All right, so that is those two things. Again, I'll have a link to the article that we just had a quick chat about, and I'll also include a link to the, it's actually macrotrends.net where I get this kind of stuff, and it's Housing Starts Historical Chart is what it's called. So there is that one. Next on the hit list for today is where do realtors expect highest price gains? Now, again, critical thinking hat on, right? I have offered an awful lot of opinions about the average realtor. And in my experience, the average realtor is not horribly good at anticipating what's going to happen. You will, and it's for the same reason that I often am skeptical of stuff that comes from Realtor.com, right? You have to understand where the bread gets buttered. For realtors, the trend or the tendency is going to be for those folks to discuss the market in a way that encourages activity in the market. The Association of Realtors tends to do that because they make money from realtors paying dues. They want more realtors out there doing realtor things. Realtors want more homes to get sold so they can sell more houses. So that's a built-in bias that I think is just, I'm not calling anyone dishonest. I'm just saying there's a built-in bias. There could be a foundation made for the idea that, well, let's be kind and call it optimism, right? Yay. But you as a consumer, as a buyer, as a seller, as an investor, keep that critical thinking hat on. But let's go ahead and see what these folks have to say. I would always suggest that this might be the most dubious source of folks telling you what's going to happen. Median expected price change within the next 12 months. And this is all from the National Association of Realtors. It's also from October. This won't be a surprise. 58% of realtors report high home prices in their markets compared to a year ago, as well as elevated levels of buyer and seller foot traffic, according to the Realtors Confidence Index, reflecting October transactions. The monthly index reflects responses from more than 4,500 real estate professionals nationwide. Realtors are also upbeat about the direction of home prices over the next year, with those in Wyoming, Arizona, and Alabama showing the most optimism and projecting home prices to rise between 3 and 4% in their markets over the next 12 years. Or 12 months, excuse me, 12 years. 73% of realtors also report that their contracts settled on time between August and October. Okay, I'm not sure how that last one helps, but the 3 to 4% expectation and rise is interesting. The areas that they seem most excited about, 3 to 4%, are Arizona, Wyoming, Alabama, the 2 to 3% range, Washington, Idaho, Utah, Colorado, New Mexico, Oklahoma, Arkansas, Missouri, Wisconsin, Indiana, Tennessee, Mississippi, Georgia, Florida, South Carolina, North Carolina, Virginia, Pennsylvania, Delaware, and Vermont. Are you ever surprised at the things you remember from school? Like the initials of what all the states are? I started reading off just based on the map with the colors, and I started thinking, God, what if I hit one and I don't remember what it is? I'm going to sound like an idiot. Anyway, so then 0 to 2%, Alaska, California, Nevada, Oregon, Texas, Montana, North Dakota, South Dakota, Nebraska, Kansas, I think I already said Texas, Minnesota, Iowa, Louisiana, Kentucky, Ohio, Michigan, West Virginia, DC, Maryland. Is Maryland that color? Yeah. New Jersey, New York, Massachusetts, New Hampshire, and Maine. And then there's some folks that think there'll be no change. There is no expectation of decline anywhere in the country on the part of real estate agents. So what do we do with this? If I am a guy who has several markets I'm interested in, and both markets that are near me that I'm interested in tend to be are according to this either in the 2 to 3% growth or the 3 to 4% growth. If you are someone who is in one of these areas and you're looking for more reasons to consider what you're going to do, if this is a thing, right? Because remember, the only situation in which, no, not the only one, I think it's always good in the back of your mind, no matter what your strategy is, to think, what kind of appreciation could I expect, right? If you're a buy and hold person and you're not as worried about building equity strictly through the ownership of the property, and you're looking at just that monthly income from the rents, it's less of a big deal for you. I would argue it should always be part of any financial analysis. In fact, when I am looking at properties where I am expecting lower appreciation on the part of the property, I expect a higher rate of return from those properties in terms of my monthly income versus the amount of money I have in it. So keep that in mind. That's, I think that's something you need to be mindful of. And I know people who their entire strategy is based on riding the local marketplace's increase in property values. So an example, and I'm not a huge fan of this style, and it's not that it's evil. It's just, I'm into, I think it's fun to add value to a property. A big strategy that was super popular back when things were going nuts was you'd have people who would buy a property and intentionally have the escrow be particularly long and literally put the house on the market before escrow closed to sell their interest in the property, get another buyer for $50,000, $75,000, $100,000 more than what they paid because the market was going at a crazy rate, and then they'd sell it, and they do nothing. Literally, they would close escrow. They'd close escrow to buy the place, and the same day they'd close escrow to sell the place. That was not an uncommon thing to see happen. Other folks have sort of a buy, hold, sell strategy, right? You buy it, you rent it. Well, okay, so I think one of the cool ones is you buy it, you improve it, you refinance it and pull some equity out for the next deal, you rent it, and then you simply do what I've suggested, and that is once a year or twice a year or once a quarter, you do math to determine if the criteria that you've already decided on your investments has been reached, which would motivate you to sell the property, right? To pull it out and move on to the next deal. I'm much more of a buy and hold guy. I do my analysis on my Hawaii property once a year. Right now would be a horrible time to sell given what's going on over there, but no worries because it's currently continuing to be positive cash flow, so I'm cool with that. All right. Now, the next thing I wanted to cover today is another article that I think dovetails really nicely into what we've been talking about. This is another article from Realtor magazine, 4 reasons there's not enough building. So we've already had a chat about confidence, right? Confidence is at a peak, right? It's at a peak since 1999, at the highest it's been in 20 years. Fantastic. So what are the elements currently in play that would also contribute to that confidence not translating into actually building more properties? And I'll tell you, there are a ton of things different in the builder's landscape compared to 1999. We've done shows on this before in terms of barriers that are put up for builders to do their thing. But let's go ahead and hit these 4 items that we're getting from the National Association of Realtors. Now, first on their list is the cost of construction lending. The Federal Reserve's policy of easing in 2019, the federal funds rate is currently 1.75 compared to 2.25 a year ago, should lead to more affordable housing, all other things being equal. So lending is becoming more positive, but was more negative. So blending that, and perhaps this is one of the things that fed the confidence level, it's a more beneficial scenario currently to get the debt you need to get in order to begin construction. Next, is there a shortage of labor? Greater employment has drawn workers away from construction jobs, making it more difficult for builders to keep projects on schedule. In Texas, where job gains are making it hard for inbound workers to find any home, let alone an affordable one, skilled workers have been drawn by higher paying jobs in fracking. We know what fracking is. Truck drivers can earn much more in the fracking industry than they could driving concrete trucks on a construction job. Texas isn't alone. There are currently 338,000 jobs open in residential and non-residential construction, above pre-recession levels. That's pretty impressive. What's interesting is even if those jobs are open, are current, and this is what these disconnects throw me, because whenever I get a disconnect like this, I want to know what they're trying to sell me. We've already established that the most recent numbers on construction is that we are nowhere near the levels of the peak, right? But they're saying this number of open jobs is above pre-recession levels. So pre-recession levels was the peak. So that does not gel with me. How do I have less than half the number of homes being built, but supposedly more jobs open to do that work? So that's a concern for me. Also, women make up only 9% of construction sector jobs when women make up almost half the entire labor force. The immigration crackdown has also choked off new labor supply. Okay, shortage of buildable lots. The NAHB's, oh wow, I have no idea how to say that name. Nanayakara said nationally 2/3 of builders are reporting there aren't enough lots to build on. Median lot sizes are going down and costs are going up. The solution, she said, is to create more efficient zoning rules and bring more land into the system. I would argue that the reason why there aren't more lots is because of zoning. There are plenty of lots. There's plenty of room. There's even here in the Bay Area, you can see areas where clearly construction could happen. There's a huge area in South San Jose that you could simply start doing building in. There's a huge area to the west of a lot of the more populated areas along the 680 corridor in California. But zoning prevents a lot of that from happening. If we were to take all of our rules, regulations, and zoning and roll them back to 1999 levels, I think you'd see a boom in construction. A lot of the stuff that screws with building was started after 1999. It was a lot of cities and states trying to suck as much tax money or whatever money, it's hard to call it tax money, as much extortion funds, whatever you want to call it, out of home building so they could ride the wave of big money that was going on with real estate. The downside is they didn't undo any of that stuff when the recession came. So now in a marketplace where it's not as super sexy to build a house, it's made less super sexy because of all these rules that were kind of introduced, rules and regulations that were designed to burden a super prosperous building environment rather than one where it was less enticing. Finally, and this is a big one, high regulatory costs. As a share of a home price, the average for regulatory costs is almost 25%. On the multifamily side, the cost is as high as 32%. Um, numbers I've heard where it's actually higher than that. I actually am not. Maybe that's changed. Maybe those numbers have gone down. But again, I'm talking not just to my new folks, but to longtime listeners. You'll recall that there were cities and counties that were simply saying to all builders, if you were building more than 4 homes, you were automatically levied a $100,000 tax per home. This was not for any logical reason. It wasn't because you need to get your sewer stuff done. No, you're paying for the sewer stuff separately. It wasn't because you need to build roads. No, you're being asked to build those roads separately. This was simply an amount that was being charged to fill the coffers of whatever organization was charging it. We had plenty of articles. We went over it tons way back when. I mean, I've been doing this show since 2007, and we had plenty of examples of that going on. I haven't seen an article on that happen in a while, so I'm assuming that stuff isn't there. But all the other regulatory stuff is still happening. Department of Housing and Urban Development Secretary Ben Carson, also speaking at the summit, said as much as 80% of the government regulations that restrict the construction of affordable housing occur at the local and state level. The administration's White House Council on Eliminating Regulatory Barriers to Affordable Housing is looking at what hurdles could be eliminated at the federal level. There are a whole lot of regulations, quote, there are a whole lot of regulations that have been on the books for decades, in many cases 50 or 100 years, that have nothing to do with what's going on today. Equally true is we have many rules that were put on the books locally, right, where the federal government does not have the ability to simply say stop doing that, that were created in the boom period because they wanted to take advantage of that boom, that are still there, that really shouldn't be. According to this, and this last paragraph is interesting, it's not just new construction that's lagging. The nation's existing housing stock needs work to prepare for the aging of the baby boomer generation. And said a person with an unfortunate name, Kermit Baker. Wow. Do you think Kermit the Frog existed when his parents picked that name? Anyway, senior research fellow at Harvard University's Joint Center for Housing Studies and chief economist for the American Institute of Architects, quote, the oldest baby boomers are approaching their mid-70s, and that's a time when you start thinking about accommodations in your home. The match between the housing stock we have now and the emerging needs of our population is a huge disconnect. Kind of agree with that, but remember, again, a topic we discussed when we were talking about the desirability of rental properties. We are finding a lot of folks in that range are deciding not to buy homes. They're deciding to sell their home and buy and rent a home in Phoenix, in some of the more desirable retirement areas there. What they're specifically talking about are homes that have some sort of in-law quarters or income suite that could be used as in-law quarters. We've talked about how different rules and regulations in San Francisco and San Jose were being proposed to loosen the restrictions on doing those kinds of things, because the restrictions are ridiculous and were profoundly preventing these kinds of problems from being solved. I never saw those go anywhere. They were proposed and then they never got passed. So we'll have to see how it goes. So that's their breakdown of the things that they think are big deals. I think so too, in terms of the bold headline, regulatory costs, shortage of buildable lots. But I think a lot of this needs to be put on the shoulders of the people who put restrictions on those very things. Shortage of buildable lots, well, that's a zoning problem. You're being barred from doing things in certain places. And I get there's a lot of not in my backyard folks and all these other kinds of things. But the reality is, even building taller buildings, for instance, right? I know there's a huge push on the part of a lot of these folks to embrace more dense housing, and that's fine. But then you have to raise the limit on how tall your buildings can be. Cities like Cupertino, where the limit is, I think, is it 3 stories, 4 stories? And those of you who live in Cupertino are going to say to me, well, wait a minute. What about City Center? That building is like 10 stories. Yes, that is true. However, there's such an awesome story behind how that got built. It was built by Apple for a purpose that they kind of convinced Cupertino to let them build it at that height. And then once it was built, they completely changed what they were going to do to something else that the city wouldn't have approved of for that height. So anyway. Anyhow, so I hope that's useful for you. In so many places, I love hearing the stories from folks in other parts of the country where the layout is so different in terms of how the markets are affecting you and your investment strategies. Feel free to send those along. I'd love to hear your stories. You can find me at therebelbroker.com or soldbyrobert.com. Both of them have contact pages for you to reach out to me. If you'd like to become a member of the Rebel Underground, you can simply text the word Rebel Broker to the number 44222. That's text the word Rebel Broker to the number 44222. Or you can go to therebelbroker.com and there's a great little button to join the Rebel Underground. So it will get you bonus content by deciding to be a member of the Rebel Underground. Thanks again for listening, everybody. As always, I hope that we have left more value on the table than you've invested in time. Maybe if you would have some specific subjects you'd like to discuss, you'd be interested in sharing those with me, so feel free to do that. Thanks again, everybody. I'll talk to y'all next time.